it's Derrick Sanderson, eXp Realty, coming at you. Just want to quick show you this really cool tool. It's called Affordability Calculator. So essentially what it does is we break down and look at, as a buyer, what is your purchasing power? How much money can you really spend on a home, and what homes are on the market that actually fit within your budget? So let's quick jump in and take a look. What you'll notice is the difference in interest rates and how that affects your purchasing power. So let's go ahead and jump in, shall we? Okay, so here is the purchasing calculator. It's an amazing tool that CAR came out with, California Association of Realtors. And over here on the left-hand side, we've got Butte County. I've got the annual household income of $90,000. Now, that's adjustable depending on how much you make or you and your partner bring in, if you're both going to be purchasing the home together. Now, typically a first-time home buyer is going to bring in 3.5% to 5% down payment cash money to the table. Now, the selected desired monthly payment. Now, this is the percentage of your monthly income that's going to go towards your housing payment. Now, in a perfect world, 30% is where you should land. The reality is that just is almost impossible anymore. And so what we're going to say is I'm going right down the middle, 35%. Most of the time, you're probably going to look at about 40% depending on your situation. And then right here, we have interest rates. So as of today, when this is recorded, Wednesday, March 15th, 2023, the average 30-year interest rate for a home mortgage is about 6.5%. Now, I'm going to show you in just a minute what's been going on with interest rates, because they've been very volatile as of the last 6 to 9 months. So let's take a look. So based off of this, here is what you can expect. Your monthly payment will be about $2,600 towards principal and interest. So that means your cutoff for the purchase of your home, you'd be looking at a home under $367,000 with a down payment of just over $18,000. So what I love about this is this breaks down the finances. It's great because it gives you kind of a ceiling. Now, at the end of the day, you are going to have to meet with a lender to get pre-approved. That's just the bottom line. If you're going to start looking at homes, you really need a pre-approval letter. However, this gives you a really good idea and kind of sets the expectation of what you're looking at and what you'll be looking into. So based on your financial situation, what's going on with interest rates, and based on what that maximum price is going to be, based on your down payment and your monthly payment, February of this year, again, we're in March, but all those numbers haven't come out. In the month of February, there were 41 homes on the market in Butte County that met this standard right here. So what does that mean? What's great is it takes these number of homes, these 41 homes, and breaks it down based on city. So you can see here is Oroville actually had 21 homes. And if you click on it, it kind of adjusts some of these numbers. But for the whole county, 21 of them, half of them were in Oroville, less than half were in Chico. That's because Chico housing is a little less affordable than it is in Oroville. But what I love over here is this bottom right box, is it breaks down for you the number of bedrooms. So any new home buyer we sit down and we do what's called a needs analysis. What are your wants and needs? What do you absolutely need in a home? What do you want in a home? What's important to you? And then we look at your budget, okay, your budget, and we figure out what's available and what's on the market. Again, it's setting clear expectation and helping us work within a box, because at the end of the day, I don't want to show you a home that you fall in love with that you can't afford. So, but right here, share of active listings. So you can see in all Butte County, 2 and 3 bedrooms make up the vast majority. 81% of the homes on the market under $367,000 are either 3 or 2 bedrooms. So if you're looking for a 4 bedroom, You can see here only two homes meet that criteria. What's great is, let's say you're like, Derrick, I'm not going to live in Orville. I only want Chico. Great. Let's click on Chico and see what's going on here. 70% of the homes you can see here, or 80% of the homes, wow, my math, were between 2 and 3 bedrooms, but that's only 10 homes. Okay. So this is what we're going to do. We're going to quick look at interest rates and see how these numbers right here change. This is so important. And then I'm going to quick show you interest rates and what they've been doing. Let's say interest rates go up to 7%, which they were about a week ago. You just lost $15,000 in purchasing power. $15,000. Okay, same monthly payment, but your interest went up, so more money is going towards the interest. Therefore, you can not borrow as much. Now, what happens if it goes up to 7.5%? You just lost $30,000 in purchasing power in this scenario versus what the rates are today. Now, what happens if rates just drop off based off of everything that's going on in the economy? If you've been watching the news, or if you're watching this at another time, Silicon Valley Bank was just taking over Signature Bank. We're seeing the market kind of do this. So let's say our rates drop to 5.5%. Watch this number right here. You are now able to look at homes that are in the $400,000 price range, and look, instead of 10 homes in Chico, you now have 20 homes to be able to look at. So it's so important. This interest rate affects how much money you can borrow. Now, you can always put down more money, which means you can borrow more money, but it's difficult to always come up with a large chunk of money unless you've been saving. Okay, so that's what's been going on. That's kind of a feel for what it looks like if you are going to purchase a home and what interest rates do to your loan amount and ability to purchase. Let's take a look at this right here. Okay, this is Mortgage News Daily. I love this site. I go on it all the time. They run the averages. So you can see it's a 30-year fixed mortgage. Okay, I went back to October 1st. You can see rates were 6.69%, but they spiked to 7.37% on October 20th. Then we saw some significant drops. They actually dropped down to, in February, just over a month ago, to under 6% as an average. Again, that's an average. And then look at what happened. We jumped up to over 7% about 2 weeks ago. Okay, and then what happens? Silicon Valley Bank gets taken over by the feds, and a bunch of things happen in the economy, and rates drop to 6.57% overnight. Then they regained, jumped up a little bit, and now have settled down today to about 6.5%. So interest rates are super volatile right now, and I want to quick show you this. Again, just since March 8th. March 8th, 7.05% average to March 15th. 7 days later, 6.5%. So there's a lot that is going on in the market, in the economy, and it's so important that you have an agent who understands this to a degree that can help advise you, and also a lender who's more than just a rubber stamp, get people approved, sell houses. You need an agent and a lender who are going to really be working for you and on your team and on your behalf to make sure that you fully understand what's going on. So that's essentially what's going on. Purchasing power, interest rates. If you have any questions, feel free, reach out. Please don't hesitate to ask. Otherwise, have a fantastic day.